Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at CMG NKE SKX and Twitter on the daily and weekly time frame heading into Friday, January 13th. So CMG gave us a bear break of the inside candlestick, and what that means is once we break the low of an inside candlestick or the high, that initiates the trade. So the break of 410.35 was the bearish signal, and we dropped a few dollars from that point, and we closed fairly weak. So the 200-day moving average is resistance, we lost the upper Bollinger Band as support, and most importantly is we're beginning to fill this gap now. The gap will fill down at 399.25, and the bears would love to see a break of 407.80 first thing tomorrow morning to give some confidence for further consolidation. The weekly time frame, watching this 419.30 level, if we see another red day tomorrow to end the week, we're going to have a big upper wick, and that's not going to be convincing enough to me. Even though we broke that price by less than $1, that upper wick, tomorrow's a pretty important day with how I interpret the week and the strength and the trend overall. So I'm going to be patient, see how tomorrow goes, but not convincing enough to break the lower high pattern and to be looking bullish longer term yet, in my opinion, unless the bulls show up and we close up closer towards 415 plus. NKE, bullish candlestick after 4 bearish days. Middle Bollinger Band support is 52.04, and the low of today, 52.16, is a key level to be watching. A green day tomorrow, and the bulls will look to confirm this candlestick and head back to the upside. There is a gap down here at 51.33. Personally, I would like to see the bulls get back into the low $53 area and then look for a bearish entry with a top fishing play looking at 54.09 resistance. And what that means is if we make a bearish entry approaching that level, we will know to exit if 54.09 breaks for the bulls and the bulls continue. But otherwise, we're going to be looking for a lower high to form and then continued pullback as we keep our eye on that gap down there at 51.33. Weekly time frame is at this middle Bollinger Band of 52.33. Bulls are going to really be trying to defend that level on a back test, and we're currently just above it by 7 cents, so all the bulls need to do is go green tomorrow to hold this level on a back test. So it's a pretty important day for the NKE bulls. SKX bulls are still sticking around, still a tight range here, and scouting a bearish entry at either the upper Bollinger Band or the 200-day moving average resistance, 26.02 or 26.24, and patiently waiting and stalking this trade. You can see the bulls are still holding up on the weekly time frame. The 50-week resistance is up at 27.02. That rejected the last bounce attempt. Overall downtrend very much intact, and not really liking where we stand on this weekly time frame in terms of clear direction. So just watching the upper Bollinger Band resistance, seeing if that will give us a bearish entry, and if the 200-day moving average were to become support after a bearish entry, we would know to exit. And last, we've got Twitter. Still liking this consolidation for the bulls of Twitter. It still looks like a bull flag. We closed at the high of the day today. The 200-day moving average resistance, 1756, is a key level. I'm going to be patient scouting a bearish entry here as well, waiting for this gap to fill, at 1787 because I do believe this setup has some continuation to the upside left in the tank for the bulls. The weekly time frame still rejecting from the 50 week of 1748. That level is going to be tested tomorrow, and the bulls are going to try and close above that level. So patiently waiting on SKX and TWTR for a potential bearish entry, and why I'm doing that is because of the overall longer-term downtrend on the weekly time frame. We want that longer-term trend in our favor, which it certainly is for these names. CMG looking for further continuation to the downside tomorrow. Bears would love to see some increase in volume with that downside. And NKE patiently waiting for a bearish entry in the mid $53 range. So we'll check back in over the weekend, see how the week wraps up. I appreciate you watching, and we'll see you then.